This episode is brought to you in partnership with the Permian Basin Oil and Gas Magazine, delivering trusted oil and gas news and industry insight. We appreciate their support of real conversations like the one you're about to hear. Subscribe today at pbog.com. Hello again, this is Grant Swartzwelder, and welcome to another episode of Oilfield Strong. We're going to be taking a look at mineral and royalty purchases, but from a different angle. As we all know, there's a lot of competition in that market, but we're going to be talking to a company that has really been very innovative in some of the things they've done using technology, AI, and the such. And so I think with AI, technology, automation really becoming so important these days, seeing how it's actually applied in a very important and growing part of the business, I think is very important. Today we have the two of the key leaders for Elk Range Resources, or Royalties, sorry. Always good to get the name right there. Charlie Shufeldt is CEO and president, has a history in the oil and gas business with IOG, and he was the founder, one of the founders of Elk Range about 6-7 years ago, as it turned out. And then Jeff Stewart is COO, has a history with from Schlumberger to City's A&D shop, but is really in charge of kind of making sure that the acquisitions really work. So let's just jump in here. I'd love for y'all to talk about Elk Range, but then also talk about Elk Range in the context of the overall business and industry of mineral and royalty purchases, because it is a very large, but also very competitive.
Yeah. Well, Grant, first off, thank you for having us. It's an honor to be here, and always enjoy talking about our business, the mineral space, but particularly the technology part is near and dear to both of us. So just to kick off with a little bit of history on Elk Range.
Please.
We started in 2020. April 1st, 2020 was the first day of business, which if anyone remembers that, it was the depths of COVID, which was a very interesting time to start something. You know, looking back, it was really perfect in a lot of ways, and it shaped a lot of what we are today. So we are backed by NGP. They made a commitment to us out of a new series of funds called NGP Royalty Partners back in 2020. And the idea there was to be a different style mineral and royalty buyer, not the traditional private equity backed royalty company, but one that would acquire with an intent to hold and cash flow the assets instead of flipping them.
Okay.
And that's always been a key part of our strategy from the beginning, and has really helped us in how we've approached buying things in the market. We're now in Elk Range 3. So we've
Fantastic. That means you've had some success there. So
we're in our 7th year. I think to date, we've deployed north of $1 billion. So been able to build a lot of scale in this space and have a lot of fun doing it. But
what type of geographic areas do you focus on?
We cover a lot of ground. Our roots go back to the Permian. That's where we started buying. That's where we made one of our first large acquisitions back in 2021. But we are a bit of everywhere. We have obviously a huge presence in the DJ Basin. We made a large acquisition from Oxy of the land grant minerals that they owned last year. And then, but we've also bought in the Uinta, in the Eagle Ford, in Appalachia, I'm trying to think it's probably easier to say where we're not. We're not in the Williston Basin. We're not really in Oklahoma, but we've bought just about everywhere else.
But you would probably enter those, I assume, if you find the opportunity, or do you have no interest in those?
I think we haven't been successful buying anything yet. What we found is it just takes some reps collecting data, which is, I think, an important thing we'll talk about today.
Yep.
To get good at underwriting, understanding what the market looks like, how things are being priced, and then eventually that puts us in a position to win. I'd say today, we've got our plate pretty full with the places we are, but it's probably just a matter of time before we're everywhere.
And so one of the points I made was the competition, because I don't know if you know it or not, but y'all aren't the only ones buying minerals and royalties. So there's a lot of people. It's become a very hot area. Talk about the landscape. I assume values are going up. It's harder to win deals.
Jeff, you want to talk about that?
Yeah. It's very competitive. And I think we've seen the market continue to increase since we got started. Certainly in 2020, 2021, we probably won close to 1 in 3 deals that we bid. And,
wow.
now
that's great. Great
Yeah,
numbers there.
Yeah.
now it's probably, 10 times less than that. So I think it just speaks to the volume that you have to work through. But I think generally, our win rate will vary based on, the deal source, if it's marketed or if it's a ground deal. But I think, we're really happy if we can win, a few percent of the deals that we bid on.
Well, and I think that also speaks to the point about data and technology, because when you're dealing with that number of deals that you have to look at to have success, that's a lot of churning of information and time and all. So, let's dive into how y'all look at technology and how y'all try to apply that in your business and kind of why you're doing that.
Yeah, maybe I'll hit it at a high level and let Jeff talk about some of the specifics. But
Perfect.
technology was always very important to the strategy from the start. As Jeff talked about, there's a lot of volume moving through the system, and so we need to be efficient in how we process that to be effective. And so from the beginning, the idea was always let's leverage data and technology to improve the velocity with which we can evaluate things. When something comes in the door, we want to screen it very quickly before we put an engineer on evaluating it. We want to make those workflows repeatable so that if we've evaluated an area already, we could easily reapply that to the next deal that comes in that area. So that was kind of a key tenet from the beginning. And that sort of, zooming out goes back to a philosophy that we had, which is technology should be part of our strategy. It should be an enabler of the business. I think a lot of organizations look at technology as kind of a cost center and an area of risk to manage. But for us, it's always been strategic. And part of that was maybe born out of the way we got started. We were all remote for the first
So you almost had to be.
almost 2 years. I didn't meet Jeff in person until we'd been working together for about 6 months.
Really?
And I was just, look, we all kind of had to figure out how to do things over Zoom or Teams and be able to exchange data and, work on common systems that we could access over the cloud. And I think starting that way really kind of forced us to operate in a very tech forward manner that's really benefited us ever since then.
And it seems like, 5, 6 years ago, y'all were on the edge. Now I think there's a big rush toward using AI and technology. In fact, I heard from a group yesterday that they're about to start looking at getting an AI agent together. I'm like, well, you're only 2, 3 years late on that, but still better late than never. So, Jeff, what are your thoughts on that? And how did y'all look at kind of which areas to target initially?
Well, that's a great question. In terms of which areas to target initially on the tech side, I guess, maybe to digress a little bit,
Please.
I would say that my background, I've tended to be probably one of the more tech forward engineers and appreciated it. And something that I liked coming here was that I was not the most tech forward person. Charlie and some of the other folks that started with us were, well ahead of me. And I think being able to learn from them was really interesting. And, I understood the benefits of, moving a workflow from Excel to, some sort of scripting, but didn't appreciate kind of how far you could take it in terms of software development. So that was really interesting for me to see kind of, okay, we've got, a system that is much more sophisticated than anything that I've ever done. But in terms of what we decided to tackle first, certainly I've always been mostly focused on the underwriting side. My background, I started at Schlumberger, like you said, and then I spent a couple of years at BHP doing, work on their asset team. And I think, you see there kind of how workflows are. And I would argue those were industry standard areas into, an access database that goes into an Excel model, like feeds the Spotfire project. And I think I saw that and understood kind of all of the bugs that could arise from that. And
Sure.
somebody leaves, they have a workflow, it's on their local machine, the context gets lost on how to run it. And I wanted to have something that was more resilient. And I think that's been something that's really important is we're churning through a lot of deals, evaluating them. And if you have a weak or underspec data pipeline, somebody can hard code something, it gets forgotten in an Excel sheet, it gets repurposed for a deal. And all of a
Oops.
sudden, you've overstated something. So having, our system where, the evaluation doesn't really touch an Excel sheet, I think has been really important. And it places a lot of guardrails on, how do we, keep the evaluation faithful to how we underwrote it.
But let's go back, because my guess, or maybe I should ask it as a question, my guess is that there's segments of the technology, like 6 years ago, AI wasn't or at least I wasn't aware of it, and I don't think it was being applied. So there was probably more automation, more making Excel work for you. And then it's evolved where there's probably additional tools, applications that have happened. So initially it was more about Excel, or I'm kind of throwing this out and y'all can correct me, but I assume 6 years ago, the automation is very different than it is now.
So I'll say one thing before I let Jeff go is we actually opened up our first OpenAI account in 2020.
Oh, okay.
We didn't really start using it till well after that, but it's something that's been on our radar screen for a long time. We built some AI tools internally, not nearly as advanced as the large language models, but
Right.
allowed us to do things very early on in the business. But I'll let Jeff kind of answer the Excel point.
Yeah, I think in terms of, if you use the Excel template, then I think a lot of times what happens is, like I said, somebody will hard code something and then
Sure.
it gets lost. So a lot of what we've tried to do is have it be, the evaluation engine is basically in a GitHub repo where, it has tests that run to make sure that if, we're upgrading the software, adding new features, that's not going to break any of the evaluation. I think pieces like that just make it more resilient. And it's all hosted in a central repository. It's not on somebody's local machine.
And so how does that kind of walk us forward? Because you looked at AI, but it sounds like didn't necessarily use it. But as it went along, you added additional tools to that, and it sounds like has become a much more sophisticated model.
I think the fruit, there's low hanging fruit before AI of just organizing the data, creating an environment where we were using processes that were driven by Python code as opposed to an Excel spreadsheet. We were applying testing to that to build that resiliency. And so where we started was really just let's get the data organized, let's get the processes, make the processes resilient. And then over time, that's allowed us, as the AI technology has advanced, to incorporate that into our workflows and really accelerate things, make things more robust.
And when you talk about data, you're talking decline curves, type curves, kind of more geologic type things, and then maybe some pricing, and you do it kind of by individual basins.
Yeah.
Flush that out for me.
I think,
Sure.
all the underwriting assumptions, I would argue, but also the wellheader data, the production data, deviation surveys, having all of our deal data in the same database that you can do joins on, having, our check data to come up with.
But a lot of that was individual transaction data.
Mhm.
But are you using that somehow for additional transactions? Or is that just kind of transaction specific? And then you have something that's kind of more basin specific that you can use for uh, other potential transactions.
I think the concept is to not have data silos. So rather than things, sitting in one spreadsheet over here and a different set of spreadsheets over here, it all sits in the same database and it's all tied together. So we can draw inferences to the relationships between maybe say check stub data on a well in an area that'll give us information about gathering, processing, and transportation terms. And that we can then use as we underwrite the next deal in that area.
But it's that area specific, because to have a lot of that data for the DJ, you don't really need for Permian.
Yeah, no, that's fair.
Okay.
Yeah. Yeah. And that's a good point, is everything's tied to a geography. I mean, everything has kind of a spatial component in this business. So building a database that was spatially driven and had the ability to map everything was really important from day one.
Okay. And so one of the big changes is the addition of AI. How have y'all started to use that, or are using that and overlaying that into some of this technology and data that you're talking about?
Do you want to talk about the well lander first, and then maybe kind of how we've evolved?
Yeah, I guess, in terms of like how we've, started on using ML or AI, I think it's also easy to jump to the leading edge, the agentic stuff that you're talking about. But I think, it creates kind of a brittle system if you go straight there and you don't have the foundation right, which I think is, what Charlie's talked about too, having the database. But I think, one of our first applications is a well name parser. So, we're not the operator. We don't control which wells get drilled, but, we need to understand what the operator is going to do on a given asset. And so part of that is we'll look at permits and ducts. And sometimes you don't have enough information through the deviation survey or the permit docs to determine what zone it's going to be drilled in. But oftentimes an operator will code in the well name what zone it is. It'll have an alphanumeric kind of code that says it's Wolfcamp A or Sprayberry, etc. And so it was basically, kind of like a random forest gradient boosting model where our geologists had already landed all the wells that we could in the basin. That's kind of the training set. And then you can kind of feature engineer, okay, here's the well name, here's the number, here's, the field, and then it would estimate what the categorization should be.
Okay.
Um,
Do you see that the biggest benefit of all the automation is in the evaluation and ultimately the offer price, or is it? That's probably that's a tough question because within that you've got acreage, you've got decline, you got pricing. So there's,
Yeah.
I guess where I'm heading is there particular aspects or sub aspects that really are more beneficial to have the technology than others?
I think it saves time across the board. The biggest, most expensive thing we do is try to source and underwrite new deals. So
Sure.
it's probably most impactful.
Well,
from
it
a dollars
sounds like it's
perspective
becoming
there.
even more so. If y'all are hitting 1 out of 10, 1 out of 15, that's a lot of deals to look at. So it's got to, that if you can speed that up.
But like the tool he talked about, I mean, that saves our geologists an enormous amount of time because otherwise they're trying to land wells, or keeps us kind of ahead of the curve, knowing kind of where the next well's coming, and we can understand the development patterns that are being pioneered by some of these operators, and as well as it helps us with our reserves, so we know kind of what zones have been developed, what zones remain to be developed. So that kind of tool helps across the board.
and I think another philosophy has been, can we get the evaluation as close to bid ready using technology as we can? And I think that's helped a lot. We need to land the wells to come up with the type curve. We need to know who operates it in what area to come up with GPT assumptions. And so the more that is in our database that has a model already ready to go, the closer we get to, where the underwriting is when we bid it.
I think that's a great point, Jeff, and leads to a very important question because when I've talked to folks about AI, they always say that one of the biggest important parts is that QC at the end.
Yeah.
So at what point do human beings, Jeff and Charlie, actually look at it, and what is that QC process to make sure that that data, that technology doesn't send you into a ditch?
Yeah, that's a great question. I think the first step, when we look at a deal and it's in our database, is more pattern matching, screening, and determining, is this a deal we want to look at? Do we think we'll be competitive in that deal? That's probably the first pass of the human, touch. And then once we make that decision, then it's kind of tearing down all the assumptions that have been placed on it. We've got assumptions by area, by operator, by zone, et cetera, but kind of deconstructing, where's the value? What are the assumptions behind it? Is this how this area is really being done? What did the permits say? And really just kind of tearing it down so that we have high confidence in assumptions that drive the value.
Yeah, but to be clear, we're not deploying $1 of capital until humans looked at that deal. So it's not like there's pricing coming out of the system and people are offering that to mineral owners. We're kind of using this more as a screening tool and a way to facilitate what our engineers and geologists are doing.
Well, it sounds like the other part besides the QC is the importance of the prompts. And in a way, that's what you're talking about, the assumptions that you're using. And you spend a lot of time on those, it sounds like. And then it spits out the results. And so then you're looking and just saying, does it make sense? Or how do you then, you've already looked at the assumptions. So then what are you looking at as a human after the fact to kind of say, okay, I do like that number. I do like that value.
I mean, some of it's just the art of the deal. There's a range of uncertainty, and even if you've got great data, there's still going to be a range of uncertainty, and figuring out, okay, what is the amount we're going to have to offer this person to get a deal done. And so I think there's a lot of that, like what's the right bid strategy. I think there'll be a range where we're confident we'll make money on that deal, and so just what does it take to get a deal done?
That makes a lot of sense. So you talk about data throughout all this and how important that is. So it's are you that's all in a reservoir someplace, or not I guess a data reservoir,
Yep.
but it's but I assume you're getting that from outside public sources. Some you're keeping yourself through your analysis, but where the top formations are, things like that, you're having to dig into Railroad Commission, other places for that type of thing, I assume.
Yeah, it's a mix, right?
Right.
We have some commercial data sources we pull things in from. We have, kind of public data sources where we're taking that data and scrubbing it. Then we have, our own private data and say wells that we own and the production or, cost or revenue data that comes off of that. And then, yeah, just a lot of proprietary analysis that feeds back into our database.
And this is a little off the topic, but it'd be an interesting question. Being involved with NGP, they see a lot of companies do a lot of other deals. Are y'all able to share data back and forth between that to either help them on their valuation or help you on your valuation?
So Jeff's done some work to help them evaluate some opportunities. They can't share confidential information from other people back to us.
But once they've acquired the data or
Yeah.
acquired the
But I think what they've been a great partner in that, we'll look at something, put forward some analysis, and they might say, you might want to take a closer look at this or that.
Right.
And so that has been helpful. They just have such a broad look across the entire oil and gas industry that they can help steer us in the right direction.
Okay. So as you've continued to develop your technology, your data, your AI, have you seen where it's been maybe more troubling or things that needed to be improved or that they kind of sent you off into an area that you might not want to be in and you've had to kind of modify it? Where are the bad spots in that whole thing?
You want to take that one?
Yeah.
You're smiling, so it sounds like there's a good story here.
There's infinite rabbit holes you can go down.
Yes.
Well, I think the training data for those models is probably quite a bit smaller for oil and gas specific domain knowledge than, medicine, for instance. So
Right.
it will tend to hallucinate more on a lot of very specific questions. And I think you still need to be, an expert in your field to be able to, tell when that happens. I think the other issues are issues that probably everyone's experienced where the context window gets too long and you've been in a chat too long. And the best practice is you need to summarize and switch chats. And then I think sometimes the other piece is just, it'll give you, a script that runs if you're doing something, coding wise, and it will run and execute, but it will do the wrong calculations. So I think sometimes if you run it and it doesn't throw an error, you'll think it worked, but you need to still, investigate and,
And then when you go back and kind of help it with what the actual calculation is,
yeah.
does it stick or does it, because I've seen sometimes where it
Yeah.
gets on a tangent, no matter what you do, it's not going to listen to you.
Some models are better than others. I think the rate of change is different with each of these large language models. They're all kind of fundamentally the same thing, but they're kind of, advancing forward at different rates. We've tried to bring some of the discipline that we use around software development and the testing that we do of code there and some of the standardizations and apply that to like the prompting. The intent there is to get kind of more consistent, repeatable outputs. And I think that has generally worked.
And so don't want you to give away your secrets, but you mentioned about OpenAI, but obviously there's others, Pilot, Claude. What's your analysis of all the different options out there?
So I think again they're largely a commodity, but they're advancing at different rates, so at different points in time.
And it seems
Different
like
ones are
some are more commodity or retail, some are kind of more enterprise. So they've had slightly different focuses.
Yeah, so we've got 2 enterprise licenses today. We have an OpenAI license and an Anthropic Claude license, and depending on the application or the user, folks are using either of those or maybe both.
So depending on who's working for you, they use it. It's not that you're using OpenAI for Williston or DJ and Claude for something else.
Correct. Yeah, it's
Okay.
more of the domain. So like maybe I'm making this up, but like maybe the division where people are using more OpenAI stuff today, and our
Okay.
software developers are using more Claude things.
And they can communicate back and forth.
Yeah, it's interesting. You can actually have like one LLM check the other guy's work and analyze the prompts or suggest prompts, which is kind of entertaining.
And have y'all been able to do that it seems like that's a great way to QC it, that yes, Jeff's smart, he can do it, but there's a lot there that, that's the whole idea of technology and AI is That's kind of seems like a neat opportunity to have that.
Yeah, it's more of a neat experiment. It's pretty time consuming. So
well.
I don't know that I haven't figured out a way to operationalize it yet, but I don't know, Jeff, maybe you've
I think
done something more useful there.
software development is probably the easiest one to point to, where you can have a code review prompted in GitHub or something, where it'll check, if somebody wrote that code, or, an LLM wrote that code, another LLM will check it. That's what comes to mind first.
Okay. So we talk a lot about acquisitions, that data part, but obviously you mentioned division order. So there's other opportunity kind of once you have the asset to be able to use AI or the various automation tools. Explore that with me as to where you've seen it really benefit. Is it on the reserve side? Is it on the division order side, the payment side? Yes and yes.
I think it's all of the above. I don't know, do you have a specific example or can you
Yeah,
more?
I think like a lot of people, we're still trying to figure out, all the best practices and how to apply it. I think we've seen a lot of wins on tactical stuff, like, replacing some outdated CSV loading code, going from pandas to polars, where, we're looking at reserve reports that can be gigabytes big. And if we're using the old code, it might have taken 30 minutes and now it takes 1 or 2 minutes. Before, it probably never rose to the top for a software engineer or developer to touch that, because we can wait 30 minutes. But now, Claude wants to spend on it for an hour. That's fine. So I think there's stuff like that we've seen just tactically that has been helpful. Other than that, I think there's some ideas that we have around how could you have an agent build a type curve or construct the inventory, looking at our database as maybe a starting point, but that's still pretty early.
One
Go ahead,
area
please.
that I find to be helpful is like if you've got a lot of rows of data, like some things work in Excel. We kind of graduated out of that early on, where there was just too much data for Excel to be the useful tool. The first fix for that was a dashboard that could help you kind of visualize things at more
Right.
scale. But we have some data sets that even are
And
kind
real quick, you graduated from Excel to like a SQL Server or to AI, or what did you graduate to?
I think, well, and say graduate is probably a misnomer. I mean, we sort of avoided Excel from the beginning,
Oh, okay.
put it in a SQL database,
Okay.
use a Spotfire
because of the
dashboard
volume.
or something
That
else to
makes
be able to
sense.
visualize it. But again, some of these data sets are huge, and even a dashboard kind of breaks down as a way to analyze the data. I talk like our revenue data, I think is a 30 million row database. So to be able to kind of pull everything in there into, and extract kind of inference from that, it's pretty difficult for a human with a dashboard. You can let, a tool like Claude loose on that, and it'll extract some very interesting inference out of that in a pretty short period of time. Like things like identifying who's slow to pay us consistently and where we need to do more work there.
That makes
Um,
sense.
and we can figure that out anecdotally by just looking at, hey, this well we bought here and we got in pay here. But it can do a great job of identifying those trends across the entire data set.
And so part of that, the speed that it helps with brings up the question that everyone asks: Does it reduce people, or does it make people more efficient?
I think what I would say is it makes people more efficient. Nobody's job is going away because AI is going to replace it. Now, I think the risk that people face is that you might get replaced by someone who's better at using AI than you are, because they're just going to be more effective at their job.
And then the other is you might not get rid of people, but you might not hire people because that one person's more efficient. Is that yes, no?
I mean, that's kind of been the strategy from the beginning, is like, if we've got
Keep
to
your
deal
head down,
with
head count
tens of
down.
thousands, millions of rows of data, we can't efficiently do that by adding headcount. So let's use technology to limit the need to add people. And so I think AI is just an extension of that.
Okay. Another kind of more curious question. Do you have someone locked away in your office doing this, or are you using international? I hear of programmers in India and other places. Have y'all
So
attacked that?
we have a dedicated software development team that's 4 full-time people internally, including
Wow.
2 PhDs. Then there's 4
Internally in your office,
yeah,
or
in our office. Yeah.
wow.
Then we have 4 full-time contractors who've worked with us, I think, essentially since inception. All they do is Elk Range work. They've been, attached to our code base from the beginning. And then as we encounter like very specialized areas we need to work in, we've worked with contractors kind of all over the world who may have expertise around mapping or
Yep.
software infrastructure that, we don't need them full time, but we need them on a specific project.
Jeff, you made a comment about reserves that I've always, when I go to different events and I talk to reserve companies, sure seems like that's going to just change their world and probably really reduce the importance of those reserve companies as these chat or as AI type stuff comes.
You're saying like NSAI or DNM.
I was being nice and not mentioning
You
names,
can
but
cut that
that's
out.
okay. You can throw any on there, but they're all the same. They're all doing reserves. It's all a lot of data. As you talk about type curves, it's like at some point, yeah, they might need one partner to look at it, but a lot of this is going to be completely done for them
I think
with an
there's
LLM.
they also have access to a lot of private data that probably, you need a third party, disinterested third party looking at reserves. And I think that'll always be a need. But I think it's definitely enabling. When I think of reserves, it's very process driven, where we're at, because we don't control the pace of development. We don't control the activity. So we're kind of reacting to public data coming in, reconciling it with underwriting. And so every quarter there's kind of, a step of, stepwise procedure, updating type curves, updating timing for wells in process, updating timing for undeveloped locations, reconciling permits with undeveloped locations. And I think, yeah, when it's process driven, especially, it's going to, and it's going to be enabled by AI. I think that's fair.
So with what y'all done so far, have you seen any real big disadvantages? Obviously it costs some money. Those 8 programmers are not cheap, I'm sure, but you got the return on that investment. But otherwise, with this evolution, have you really seen any negatives?
I would say no. I think early on there was some conversations with NGP where we were doing something. We were approaching this business very differently than I think what they'd seen in minerals, certainly, and
Sure.
even in their upstream business, being very technology and data focused. And so they reminded me early on, you're going to be evaluated by your ability to deploy capital and to attract risk reward opportunities in the space.
All the bells and
Yeah.
whistles are nice, but money is what counts.
Exactly. And we took that to heart. I mean, we didn't spend, 12 months building something to then get started buying things. We were kind of doing it as we went along. And I remember early on, Jeff called me and said, "Hey, kind of feels like we're building the plane while we're flying it. Do you think this makes sense?" And, fortunately we were able to pull that off.
Yep.
And I think, the technology piece and having so much internal has really been a big facilitator of our success. And it's fun now that conversation with NGP has turned to more they want to hear about the technology and what that's doing for us.
You've done all the hard work. Now they want to exploit it elsewhere, probably.
I think they're just proud of what we've accomplished,
Yeah.
and it's been fun to kind of just to see the evolution of that conversation, because we were trying something new. I think taking some risk, and it's fun when that works out.
So let's look kind of toward the future, because other royalty buyers are now getting into all of this. I'm hearing more talk throughout the AI words and all. So how do y'all stay kind of on the front edge going forward?
I mean, I think part of it is having a solid foundation, in terms of having, been tech forward from the beginning, having a database where all our data goes, everything can communicate. You can point an LLM at that database and extract insights or whatnot. A less sophisticated shop, you're probably going to have data squirreled away in your file structure.
Oh, for sure.
And, trying to get an LLM to go find that data, ferret it out. I think that's the solid foundation.
It seems like there's so much advantage of building it while you're flying, because there's a lot of data, but y'all were able to kind of add it as you went, where a lot of these folks just have a big old chunk of stuff that they now have to at one time kind of get loaded up, and a lot of nuances I think would get lost in that.
Yeah, I think we're lucky that we didn't have a lot of things established when we decided to be a more data centric organization, that we were able to start that way. That was a big advantage. But look, I worry every day about getting leapfrogged by someone else who's just starting now and maybe doesn't have, like you develop some baggage, 6 years in business, some ways of doing things, some ways of tracking your data. And if being able to start fresh was a real advantage to that. So we're always, we have a lot of conversations about how do we keep the edge here? How do we pay attention to what the new technology is? How do we, where do we need to innovate?
So let me push you. So how do you end up looking at that? It's you explore new technologies and see if that's applied, but what are those steps? Just give away all your secrets. Come on now.
The technologies we're looking at are sort of the steps to kind of reevaluate things on a regular basis.
Yes, because reevaluating is kind of the technology and what additional tools, but also, whether it's marketing elements with it or how to use this in other parts of the business, kind of what are those kind of next steps in that evolution?
So I think it starts with the people in a few ways. Like leadership has to care about technology and view that as an asset.
Clearly.
So I think we check that box. And we built a team that knows that they can leverage technology to be more effective. And so it kind of permeates the entire organization. And then within that team, we have a dedicated technology team that's in-house, not contractors that go off and do something else half the year and then work for us half the year. They're here full time. Thinking about our business problems, as well as spending time looking at new technologies and how they can apply that to solve our business problems. So I think it's just, we have to continue that culture.
And one of the points you just made, I know we talked before filming about, at the end of the day, it's about people and finding those people. How's that been working for you? Because it seems like a very strange market out there.
We have been very fortunate to hire some great people that bring a combination of industry experience and, a love for technology and a desire to leverage that in their everyday workflows. But, those are special people and we're always looking to hire more.
Okay. So, be sure and email them if you're looking for a technology-based opportunity there. So it's, anything else you'd like to add that I've missed that, you'd like to share on, technology or your business? Maybe I'm just so good at interviewing that there's no need. So that's fair.
I think it's an exciting time. I mean, it was exciting when we got started and everything was new for Elk Range, but
Right.
just the rate of change that we've seen in technology that's been brought on by AI, sometimes it can be a little stressful, but it's fun to see just how much things improve year over year. If you put me here a year ago, I would have been probably a lot more negative on what we could do with LLMs as agents in our business. But today we're beta testing a lot of agent driven workflows that are working really well. And so I think, let's do this in a year and I think there'll be even more.
Well, it seems like to a degree that plane is still flying while you're building it because the technology keeps evolving at such a fast pace that you're never quite on that plane going at the same
It's got all the key parts now. It's got like the fuselage, the wings, and the engine. We're just adding on to it. Yeah.
Very good. Charlie, Jeff, really appreciate you coming, talking about Elk Range, talking about what y'all done. It did seem to me that y'all were early on in the whole technology and the evolution of automation and AI, and understanding that, especially as it's become so hot right now, that I think that's a fantastic story. And I bet there's going to be quite a few people that listen to this that are jealous that y'all have evolved to this point. So really appreciate you listening in on another episode of Oilfield Strong. Hopefully you've enjoyed this. There's a variety of others within our YouTube channel and our podcast. Would really invite you to look at that, connect with us, share it with other folks, because I know there's other people that would really like to hear this story and some of the others. But thank you again for listening in on Oilfield Strong. If you enjoyed today's conversation, be sure and check out Permian Basin Oil and Gas magazine for deeper industry coverage and analysis. Thanks to PBOG for supporting Oilfield Strong and helping to amplify these important conversations. Subscribe today at pbog.com.